Social media has become a powerful force in financial markets, capable of moving stock prices in real time. Platforms like Reddit, Twitter, and TikTok have given rise to meme stocks and finfluencers, individuals who can spark massive buying frenzies or sudden sell-offs with a single post. Traditional market fundamentals are often sidelined as hype viral trends, and community-driven momentum now drive short-term price swings. Understanding how social media shapes investor behavior is crucial in this fast-paced, unpredictable landscape. Today we will talk about how social media moves the markets, meme stocks, influencers. So before we start, make sure to hit the like button and subscribe to my channel. 1. Rise of social media trading platforms. The rapid growth of social media platforms like Reddit, Twitter, TikTok, and Discord has fundamentally reshaped the landscape of financial markets. Unlike traditional investing channels that required investors to rely on brokerage research, financial news, or analyst reports, social media has democratized access to market information, often unfiltered and immediate. Communities such as r/Wall Street Bets on Reddit have demonstrated that retail investors can collectively move stock prices significantly when acting in unison. These platforms enable millions of retail investors to share ideas, strategies, and memes in real time, creating momentum that can push specific stocks to soar, sometimes regardless of their underlying fundamentals. This environment has not only accelerated the spread of information, but also the speed of decision-making, fostering a form of investing that is heavily driven by group psychology and morality. 2. The power of meme stocks. Meme stocks like GameStop, AMC, and Bed Bath & Beyond have become symbols of this new era of market dynamics powered by social media. These stocks often start gaining traction because of viral posts, memes, or coordinated calls to action on platforms like Reddit or Twitter. The price surges are typically not supported by fundamental valuations, but by collective retail enthusiasm and, in some cases, a desire to punish institutional short sellers. The GameStop saga of early 2021 epitomized this phenomenon, where coordinated buying by retail traders forced massive short squeezes, pushing the stock price to extreme highs. Meme stocks thrive on narrative and community momentum, rather than earnings reports or balance sheets. 3. Finfluencers and their growing influence. Financial influencers, or finfluencers, have emerged as powerful market participants capable of shaping investment trends with a single tweet or video. Unlike institutional analysts who are often regulated and scrutinized, influencers can build massive followings quickly, especially on platforms like TikTok, Instagram, YouTube, and Twitter. Some finfluencers provide genuine educational content, but others promote speculative plays, often without fully disclosing risks or their own financial positions. These personalities can mobilize thousands of retail investors almost instantly, amplifying buying or selling pressure on specific assets. In many cases, their influence bypasses traditional financial gatekeepers. A single stock recommendation or crypto endorsement can cause prices to surge within minutes, particularly if the influencer commands significant trust and reach. 4. Speed and virality of information. One of the most transformative aspects of social media's influence on markets is the unprecedented speed at which information travels. A viral tweet, a TikTok video, or a Reddit thread can reach millions in seconds, triggering rapid market movements before traditional media can even react. In the past, market-moving news would pass through layers of verification and reporting. Today, the barrier to sharing potentially market-sensitive information is virtually non-existent. This speed creates both opportunities and dangers. Investors can quickly capitalize on breaking trends, but they are also highly susceptible to misinformation, manipulation, and panic-driven decisions. The GameStop and AMC rallies were supercharged by this instantaneous transmission of bullish sentiment across platforms. 5. The rise of community investing. Social media has fostered a powerful sense of community among retail investors who traditionally felt disconnected from Wall Street. Platforms like Reddit's r/Wall Street Bets, Twitter finance circles, and Discord trading groups have given rise to a form of community investing, where participants rally behind common causes, whether it's to squeeze short sellers, support distressed companies, or simply rebel against financial elites. These communities often cultivate a shared identity, language, and humor, using memes and slogans to build cohesion. This collective mindset can have real market impact, as group decisions to pile into or abandon stocks create massive swings in supply and demand. The community investing phenomenon has also bred a culture of holding diamond hands despite volatility, often encouraging retail traders to remain loyal to meme stocks or risky plays in the face of conventional market wisdom. 6. Behavioral finance in the social media era. The intersection of social media and investing has magnified several behavioral finance principles, particularly herd behavior, confirmation bias, and fear of missing out, FOMO. Social media creates feedback loops where trending posts, popular opinions, and viral content dominate visibility, often reinforcing prevailing sentiments and sidelining dissenting views. When investors see a stock repeatedly hyped across multiple platforms, it activates confirmation bias. They selectively notice information that aligns with their existing beliefs or hopes for quick profits. FOMO is particularly intensified in the age of instant social media alerts and rapidly moving meme stocks. Investors fear missing life-changing gains, prompting impulsive buy-ins without thorough due diligence. Additionally, social proof, the idea that a behavior is correct if many others are doing it, drives even more people to join the bandwagon. 7. Social media risks and manipulation. While social media has democratized investing, it has also introduced new risks, including manipulation, pump and dump schemes, and the rapid spread of false information. Bad actors can easily exploit social platforms to artificially inflate asset prices by spreading misleading narratives or coordinated promotions. Unlike regulated financial institutions, many social media promoters face little oversight, making it easier to orchestrate manipulative campaigns. Pump and dump schemes, which were once relegated to shady penny stock newsletters, now find fertile ground on TikTok, Discord, and Twitter, where hype can build in minutes. Investors can find themselves trapped in artificially inflated assets that collapse as soon as the orchestrators exit their positions. Additionally, bots and fake accounts can amplify the illusion of popularity or consensus around a particular stock or cryptocurrency, further misleading retail investors. 8. Regulatory response and market evolution. The rise of social media's influence on financial markets has prompted regulatory bodies, like the U.S. Securities and Exchange Commission, SEC, to reassess their frameworks. Traditional disclosure rules and market manipulation regulations are being challenged by the decentralized, fast-moving nature of social media. The SEC has issued warnings about the dangers of following Finfluencers blindly, and is beginning to investigate cases where social media-driven price surges may have involved deceptive practices. However, regulating decentralized communities or anonymous posters is inherently difficult. The broader market is also adapting by developing social sentiment analysis tools to gauge the impact of trending discussions on stock movements. Hedge funds, algorithmic traders, and retail platforms now track social media conversations in real time to either capitalize on or defend against viral trading trends. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.